Over the past couple of years, I bonds have been one of my favorite recommendations for investors and savers. In terms of risk reward, I think they've been hard to beat. The yield's been close to 10% thanks to soaring inflation, and they're backed by the full faith and credit of the US government, making them about as close to risk-free as an investor can get. Now that inflation's really backed off, though, is it time to redeem those or cash them in? I think that's something worth exploring. My name is Scott Caulfield. I am a CPA and CFA charter holder, and I am the founder of Sophos Wealth Management. So first, let's just take a quick look at I-bonds. They consist of basically two components in terms of the interest rate. There's the fixed rate and the inflation rate. Now, the fixed rate over the past several years has been pretty close to zero, and at the height of the inflation, they were at zero. So here's a little look at where those fixed rates have been. It's ticked up a little bit here recently, but that's not that significant a component. Now, the inflation rate has been the bigger component of the recent return. 9.62% was that peak back in May of 2022, but you can see from November of 21 all the way through 22, that inflation rate has been pretty significant, and is a huge reason why I was recommending these to people. Now, of course, the downside is it's been hard to get money into I-bonds. You can only put in $10,000 per individual. You can get an additional $5,000 in through a tax return, but those would be in paper I-bonds. Now, with the inflation rate having come down a lot, I think it's worth exploring whether it's time to redeem these. Investors can get a significantly higher return in short-term treasury bills. Here's a look at where treasury rates are at. You can see that it's quite a bit better return right now than that almost 4% rate you're getting, at least on the inflation component of I-bonds. Now, when you want to cash in an I-bond, it's important to remember that for the first year, you cannot cash it in at all. If you cash it in within the first 5 years, you have to give up 3 months of interest. So for most people, I don't think now is quite the time to redeem these. You're potentially giving up 6.48% interest thanks to that November 6.48 reset. And so the way that this works too is the inflation rate resets on your I-bonds every 6 months from the date you purchase it. So if you bought it in May of, say, 2022, then yes, you would have reset in May of 2023 to that 3.38%. But if you'd bought it in, say, July of 2022, your rate's not going to reset to the 3.38% until July of 2023. So I would wait, if you're considering selling, I would wait until your rate has reset and then 3 months have gone by so that you're giving up 3 months of the 3.38%. Now, let's just use me for an example. My bonds are not going to reset until October, and I'm going to be watching what inflation does between now and then to consider whether or not I want to sell my bonds. But I would not sell my bonds until January because I want to give up not the 6.4, but the 3.4. So I'll wait until January. I'll see where the I-bond inflation rate's at in November, and then I'll make the decision. For those considering now, though, if yours did reset in May, a couple months from now, you may consider selling this and going into those higher yielding treasuries. It kind of depends on, one, your overall financial situation, and two, where you think inflation's going to go. If we stay in the low threes in terms of the inflation rate on I-bonds, I probably will sell mine come January. But it will depend on what opportunity set looks like at that point in time. So I hope this video was useful for you. If it is, feel free to like it or share it so that other people can see it, and feel free to subscribe so that you can get more of my future videos. Thanks a lot for tuning in.